So today we'll be looking at an important part of the business, which is capital allowance and company's income tax computation. So uh, it's very important we understand the workings of capital allowances. It's very important that we understand that it's very key to the survival of the business. So if you are working in a manufacturing company, you are working in an engineering company, okay, it's very good to take note of your capital allowances. So quickly, I'll be going through what capital allowance before we look at the computational part of it. Capital allowance in Nigeria is claimed against accessible profits of a company. It spreads the tax relief for the cost of a qualifying capital expenditure over some years. A company cannot reduce its taxable profit with depreciation expense. So capital allowance come in place of depreciation. So ordinarily in the tax law, there are, when it comes to depreciation is not an allowable deduction. So if you are deducting depreciation for your financial accounting, the taxman will not permit you to charge depreciation in order to you to claim, to reduce your income by depreciation. Instead, you are giving capital allowances. Okay, and capital allowance is given for qualifying capital expenditure. So qualifying capital expenditure are those expenditure that they are qualified for capital allowances, and it's not they are not all expenditure. So that means that if you do not track your assets very well, you might not be able to claim your capital allowances. And take note, capital allowance is not given; you have to claim it yourself when you've kept proper records. So for condition for claiming capital allowances, the taxpayer must making the claim must own the capital allowance, the qualifying capital expenditure. If you want to claim capital allowance, you must be the owner of the qualifying capital expenditure. It's very key. Okay, it's not. It must be owned by you. Okay, so if you are claiming capital allowance on plant and machinery, furniture and fitting, motor vehicle, it must be owned by you. The company must have incurred qualifying capital expenditure under the Nigerian tax law. Qualifying capital expenditure differs from fixed assets. Qualifying capital expenditure is acceptable type of fixed asset that enjoy tax relief. So basically, you must have incurred that qualifying capital expenditure. That means that you spent money to acquire it. Okay, and I said it's different from fixed asset. The taxpayer must be the beneficial owner of the asset at the end of the basis period. They're what they call basis periods for capital allowances. And you must be not the owner at the beginning of the basis period. You must be the owner at the end of the year. So if you're now in the Finance Act, basis period have been simplified. It was before that commencement rule and cessation rule and change in accounting date rule brings about issues in basis periods. But now we don't have much challenges in basis period. Basis period is just like accounting year now, your accounting year. So basically if your basis period is 2020, so the 1st of January 2020 to 31st December 2020, those are your accounting year, and that's your basis period. Now, the assets must be owned by you at the end of the year. That's what I'm saying in a nutshell here. The asset must be used wholly, reasonably, exclusively, and necessarily used for the company at the end of the basis period. The taxpayer must get an acceptance certificate. Now, the asset must be used wholly for the business, reasonably, exclusively, and necessarily. This is the REN principle, the popular REN principle. You must ensure you are using the asset for your business for you to claim capital expenditure. And if your capital expenditure is above 500,000 naira, you must get an acceptance certificate, that's CAFA, from the Federal Ministry of Industry. Uh, this is very important. Now, what are the types of capital allowance? The types of capital allowance we have, I'm being fast because of some technical issues I'm trying to resolve. Okay, the types of capital allowance we have the initial allowance, we have the annual allowance, and we also have the balancing adjustment. So these are the types of capital allowance we have. The capital allowance for initial allowance, it's the one you enjoy it one off. It's a one-off relief in the first year of purchasing the qualifying capital expenditure. Now, this means initial allowance is calculated only once in the useful life of an asset. It's not recurring. So you just calculate it, that's all, maybe 15%, maybe 25%, maybe 50% or 95%. You just calculate it once, and that's all. We also have annual allowances. Your annual allowances is every year, it's just like your annual depreciation. Okay, and you calculate that every year and you claim it. Your capital allowance is used to reduce your taxable income, and it's very good. And most companies that do not fix, that do not companies that do not keep fixed asset register, they miss a lot. They find it difficult to claim their capital allowances, and it's a loss to them. Now, what we have balancing adjustment. The balancing adjustment is calculated at the point of disposing a qualifying capital expenditure. So when you are selling your qualifying capital expenditure, and the disposal proceed is higher than the tax written down value, okay, just like the carrying amount when it comes to financial reporting, like you make a profit from the sales of that asset. So if your disposal proceed is higher than the tax written down value, then the excess is called the balancing charge. A balancing charge, and that's added to your income for CIT. You charge it, you pay additional tax on that. However, if your sales proceed is lower than your tax written down value, is lower than your tax written down value, that the difference is called balancing allowance. Balancing allowance, and that will be additional deduction. It will reduce your taxable uh, profit. Okay, so we also have what we call investment allowance. That one comes if you incur expenditure on plants and machinery, like manufacturing company and plants and machinery. You enjoy 10% investment allowance if you invest in Nigeria by investing in plant and machinery. Like Dangote, what Dangote is doing in refinery, investing in plant and machinery. A lot of manufacturing companies enjoy investment allowance as well. So, but it's just 10%, and you enjoy that. Okay, and we also have the rate of capital allowances. The rate of capital allowance, we have the initial allowance and the annual allowance. The initial allowance and the annual allowance. And I told you that the initial allowance is you enjoy it one off, just one off. Then annual allowance is every year. You enjoy it, you claim it every year, and it will reduce your taxable profit. On building, the initial allowance is 15%, the annual allowance is 10%. Whether it's industrial building or non-industrial building, that's it. On mining, the initial allowance is 95%, the annual allowance is nil. On plants, agricultural production, the initial allowance is 95%, the annual allowance is nil. Then on others, the initial allowance is that other plants apart from agricultural production. The initial allowance is 50%, the annual allowance is 25%. On furnitures and fitting, the initial allowance is 25%, the annual allowance is 20%. On motor vehicles, the initial allowance for public motor vehicle use for public transportation, the initial allowance is 95%, the annual allowance is nil. On motor vehicle others, the initial allowance is 50%, the annual allowance is 25%. On plantational equipment, the initial allowance is 95%, the annual allowance is nil. On housing estates, the initial allowance is 50%, the annual allowance is 25%. On ranching and plantation, initial allowance is 30%, annual allowance is 50%. Research and development, initial allowance is 95%, annual allowance is nil. All what I'm saying is on your screen. I'm sharing my screen with everybody, and you can see that. But one thing you take note is that for research and equipment, plantational equipment, and agricultural production, they enjoy high initial allowance. They enjoy their capital allowance at a go, and again at 95%. They don't claim yearly annual allowance. They don't claim. They don't claim that. So it does initial allowance and annual allowance, and only initial allowance for them. And they give them a huge one because the government wants to encourage research in Nigeria. But unfortunately, we still are not seeing the impact of research, even with all the uh, incentives we are seeing in research and development. In agriculture, even in manufacturing, they enjoy additional investments. I mean, those investing, most especially manufacturing, like additional investment allowance of 10%, okay, is there. But of course, we know that issues goes beyond taxation for when it comes to fiscal policy and development in the country. Taxation is part of it, we contribute, but other factors might be inhibiting growth. But our tax system is quite friendly compared to other jurisdictions. We also have what we call restriction in capital allowance. Agricultural business and manufacturing company are